Welcome to the first day of programming for Invent Oregon 2021. We will be joined shortly by a panel discussing the funding dilemma of hardware-focused startups. Panelists will be focusing on why many investors are hesitant to back manufacturing startups and exploring what needs to change to broaden the access to capital for hardware-driven startups. Our moderator today is Juan Barraza with PSU's Center for Entrepreneurship, bringing together his years of experience with entrepreneurs and program development. He is joined by experts in the venture capital world.
Hi, good afternoon and welcome back. My name is Juan Barraza. I'm the Director of Student Innovation at the Center for Entrepreneurship in Portland State. We manage the program Invent Oregon. Today, we are tackling that difficult conversation about once we have an idea and technology that solves problems in our community, people's lives around the world, how we can provide the additional funding they need to be able to launch that idea to market. And in reality, is funding is a dilemma for startups that have the focus on hardware. Anything to do with hardware or science is very complex, very difficult to get funded. Many times investors, traditional investors, are focused on funding software products, right? They require a little bit of funding and a small team to be able to capitalize them and then have the exponential growth. Unfortunately, for hardware startups or science-driven startups, that is not the case. While the cost of developing a software company over the years has reduced significantly over the last 20 years, hardware, science, and industrial-driven startups, they haven't been able to get to that parity. So today, we have invited two amazing panelists to help us figure out and understand how we can unlock the access to capital for those necessarily startups and companies that we need in our day-to-day life. They're solving complex problems in science and with technology that will help save people's lives. And if this pandemic is any sample of why we need science-driven focused companies, it is very important we give them the access to capital. So today we're going to start our panelists. They're going to introduce themselves. Cheryl Campos, Head of Venture Growth and Partnership from Republic, and Ken Vaughn from Vertuelab. He's the Director of Impact Investment. Cheryl, welcome. Ken, welcome. Could you start with you, Cheryl? Tell us more about your work at Republic.
Yes, so thank you so much for having me, everyone. Super excited to be here. I essentially work at Republic, which is a spin out of AngelList that allows anyone to invest in startups, accredited or non-accredited, and for startups to raise up to $5 million on the platform, which is pretty exciting because the SEC rules just changed recently. And so now it allows for companies to raise even more money from retail investors like us that can invest as little as $50. So we have helped over 250 companies raise over 200 million to date through the platform. And not only that, but what's amazing is the diversity of our founders, because we get them cold inbound, we get them through our venture partners. And so we're able to see a lot of different underestimated founders. And so we have about 40% of our founders are women, 20% are Black and Latinx, and they hail from over 33 states. So I'll stop there, but yeah, thank you so much for having me.
Thank you. Thank you. Ken, welcome.
Thanks, Juan. Great to be here with you and Cheryl today. This is a topic that's near and dear to my heart from a couple of different perspectives. Our organization has a long history of working with the state universities in Oregon to help commercialize university research and work with entrepreneurs in the region. And also as a sort of a recovering engineer, where I used to design hardware solutions and bring them to market in the early part of my career, I can certainly relate to the challenges that people feel. So just a little more information. Vertuelab is a nonprofit that actually invests in for-profit startup companies focused on our mission. And our mission is about solving environmental challenges and growing the green economy. And so we provide entrepreneurial support programs, training, grant writing assistance, and then we also provide investment capital in some cases through our new climate impact fund that I manage. And so our goal there is to help those companies that might be stuck, that might be having a hard time finding the capital that they need to be able to get far enough along where conventional capital will invest. And while we're doing it, we're also in our own organization and through how we select startups and how we work with them, looking to try to diversify the field, both the field of inventors and entrepreneurs, and also investors.
Thank you. One thing before we get started with how could get funded. Until recently, that wasn't enough coursework or classes you can take or anything can prepare you to become an angel investor or join a venture capital fund and understand all the nuances, how you make a selection of what companies to invest and what is the criteria. Could you, each one of you, share what drew you into the world of venture capital? What was your roadmap to get where you are right now? We'll start with you, Cheryl.
Yeah, so I went straight after Harvard. I went into banking because that is what you do. It is essentially a machine that gets you either into banking or consulting. So I, leaned into my strengths of math and analytics, and I was there for about 2 years, and then jumped ship to a private equity firm out in Connecticut. Then did that for a year, and what I found was that traditional finance is more around preserving the past and the status quo, whereas fintech I found was molding the future, which is very interesting. And venture is all about predicting what the future and where the puck is going to go, right? So I had more of the conventional path where I was able to do the things that people expect you to do before VC. But at the same time, Republic is in a very unique path or space because it is the intersection between startup and VC, where we're just a VC, just tech enabled, if you really think about it that way. And so, it's still very similar criteria around what we look for. And it was definitely a good way to transition into this world where I thought, you had to have a CS degree to get into tech, and you had to, have just entrepreneurial experience, right? Being an operator before you go into VC. So it's been a wonderful journey. It's never conventional. Everyone has a different path, but definitely, happy to be here.
Great, thank you. Ken, tell us, what was your journey? How you end up in impact investment and Vertuelab? What was your journey to get you there?
Yeah, well, I guess my first exposure to venture capital was when I started a company in my 20s. And if you take a look at me, you can probably figure out that was a long time ago. So I started a company and raised capital when I did that. And then I worked at a number of other startups over the years that were venture funded, and saw some of the challenges and opportunities associated with getting hard tech startups off the ground. And then, later in life, I became an investor, venture partner, and a limited partner in a couple of venture funds before joining Vertuelab, which at the time was called Oregon Best. And so it's kind of interesting. At Oregon Best, we were investing or funding companies using state dollars, state economic development dollars, to try to grow the economy in the state. And then the state asked us to shift from grant making to investing, so that in case the company moved out of the state would still be able to get some kind of returns on that money. And so in 2014, we became accidental impact investors. We were investing in companies, but for a purpose, with a mission. A mission, as I said before, to focus on environmental challenges and to grow the economy. And so that's sort of the fundamental idea about impact investing, that it's some combination of looking for impact alongside financial returns. And so we became impact investors, and then we've just embraced that in the subsequent years as that's become a much larger growing phenomenon in the financial services industry, and it's also being driven out of the philanthropic world. So that was how I got interested in capital and now in impact investing.
There's a great deal of experience that you have working, seeing the transition, right? And we'll circle back into that relationship between government funding, state and federal dollars to catalyze and invest in long shot concepts, right? Concepts that require a lot of R&D. Can you share, both of you share a success story of a team that you were able to help that otherwise no way, no how they could see into market? Just one example of like we did this and that helped this company to get off the ground, and now they're a great success. And we'll start with Cheryl and then Ken. Thank you.
Yeah, so I feel like a lot of companies that might have a hard time raising are life sciences companies. They're not necessarily ones that are the most exciting from a VC perspective, sometimes because they're very capital intensive or they just have very long time horizons. But we actually worked with one early called CNS Pharma that had a roadmap to, getting their clinical trials done, and that they were going to be FDA approved, and they just needed some capital to really get them to the next stage of growth. And so we were able to do that for them back in 2017, 2018. And not only that, but then eventually they were able to IPO. And so they were a microcap biotech company now that is publicly traded. And so people were able to get a return, which I thought was really impressive because it was also on a shorter time horizon than we expected. So we took a chance and it paid off, and it worked to everyone's benefit. And not only that, but it also helped with really understanding and getting some treatments around different types of cancers. So it was doing something really good for the world and for our future.
And so huge help, right? Those companies that are tackling very complex problems like a cancer, right? There's so many types of cancer that need to be, they're in the lab, they're getting tested, and once you go to human trials, being able to go beyond that to commercialization is huge. That's exciting. Ken, tell us your best success story so far with Vertuelab.
Okay, Juan, I'm gonna slightly break your rule. I'm gonna talk real briefly about two because I think they're both interesting. I'll talk more about one, but one is a company called Ess Inc, which you will appreciate. Started out in a small lab at the Portland State Business Accelerator, about the size of a large closet. And when we intersected with them, it was just the two founders trying to figure out how to make their technology work. And so we provided some funding, which was match dollars that were needed to allow them to get a $2.5 million, if I remember, grant from the Department of Energy, which really was the beginning of the capital that they needed to really get their product fully developed. And then the reason I wanted to point this one out is I think 2 weeks ago, it was just announced that they'll be going public through one of the new SPAC IPOs with $1 billion valuation. And they have a 100,000 square foot manufacturing facility in Wilsonville. And so there's a lot of job creation that goes along with that. So that would be an example. And just real briefly on another, we've just funded out of our fund. We made our first investment out of our new fund. And that was a company that started off in our accelerator program, the Cascadia Clean Tech Accelerator, where we worked with them 2 or 3 years ago, just on their basic business plan, learning how to pitch to investors, sort of the fundamentals of success at that early stage. So we started off with that entrepreneurial support and training. We introduced them to their first investor just through our networks, and then now we have invested in them as they kind of move to the next level. And I wish I could tell you the name, but we haven't announced it yet. So this is a teaser. Watch our website for an exciting innovation in the world of perovskite materials in the solar industry.
Juan, you're muted.
Sorry, let's keep the conversation going with you for a moment, Ken, because we want to make the connection between state and federal dollars funding R&D heavy startups, and then that's a traditional path that we follow, and then how Republic is coming into the picture and how that can complement each other. So as we know, it's different types of funding available for startups. SBIRs, NSF, Department of Defense, Department of Energy grants that help those capital-intensive startups. Then we have SBA loans, angel investment, venture capital, or friends and family. For hardware startups, the first stop is with you, Vertuelab, SBA loans. Explain to us how easy or how difficult it is to get there, to get funded, and what are the steps that any hardware or science-driven startup needs to follow to get ready to be able to tap into those resources?
Yeah, so I would say that any hard tech startup should be looking at SBIR grants or similar kind of, there are also state programs. And there's a lot of money available for those programs. And they are essentially intended for the initial research and development. They're intended at phase 1 for a research program, typically might be $100,000. And then if that proves successful, then it can lead to a phase 2, which might be $1 million. And all of that money has to be spent on the hard work of designing and building the product and getting it to a prototype stage. So for any company that can qualify, which is most companies that could qualify for that kind of money, they should definitely be looking at it. And it is a little challenging. The application process is a little daunting, and you can work with organizations like Vertuelab and others that navigate that process all the time and can help sort of work with you side by side to help you navigate the process successfully too. And then some of the challenges with that money is it won't always cover the other things that you might need at that stage, like filing patents or doing business development activities or other things that are outside the scope of that research and development. So we need other sources of capital, and Vertuelab is one example, that can operate alongside SBIR dollars to cover some of the other business aspects that are important at that very early stage when the product is still under development.
Now, how does tie up to the impact fund that you're leading? How you decide which companies that you help earlier with SBIR grants, they make the leap to the impact fund?
Yeah, and I would say one quick thing, Juan, you laid out very well that sort of those traditional sources of capital, the grants, the angels, the VCs, the SBA loans, et cetera. So the impact fund is an example of a new type of capital. So this is capital that's sourced principally from philanthropic sources. This is money coming from foundations through program-related investments, which is a sort of an alternative to grant making, or it's individuals investing through their donor-advised fund, money that they've already donated. And so it's creating a new rung on that capital ladder that because it's philanthropic dollars, it can be mission first. And so, we think of our fund as an impact first vehicle. And so our criteria for investing in companies out of the fund essentially has 3 main planks. One is the company going to be able to move the needle on climate change? Is this a technology that has big greenhouse gas benefits? So that's number 1. Number 2, does the company have the earmarks of success on the commercial side? Are they going to be able to attract follow-on capital? Are they going to be able to sell their product and be successful? Because we won't get the impact if they're not commercially successful. And then number 3 is this a company that's really appropriate for a nonprofit catalytic investor to be investing at that stage? If the private markets and grant markets are satisfying the needs of that company, then there's really no need for a sort of a charitable intervention. And so those are sort of the 3 main things we look for. And then we look for some other things as well. One thing we look for is diversity. We like to see diverse teams because diverse teams tend to perform better. And as a core value, we're trying to diversify our own industry. And then we also look for support systems. If it's a company that we are working directly with, we know, we've learned over the years that a lot of these early stage companies, it might be 2 engineers, starting a company for the first time, or an academic who's left the university and they're doing a company for the first time. We know they need more than money. They need mentoring, they need guidance, they need education. And so we look to be sure any company that we invest in, either through our own support systems or the ones in the ecosystem where they're located, are adequate for their needs beyond just their capital needs.
Thank you. And that we have to remember, right, that I know they're getting money through the federal dollars or federal programs. It is complex, but many of those dollars are grants, right? So it's non-dilutive capital that can help the company reduce the risk to be able to go to market and be more appealing for other types of investors. Cheryl, switching the conversation, changes and regulations in who can invest in startups have changed. Now is the Jobs Act, correct? That's the correct name, right? The Jobs Act has allowed non-traditional investors to be able to look. Not accredited. Thank you. Not accredited investors to be able to tap and take opportunities or invest in early stage ventures. How Republic is looking at the funding for the different lands and taking advantage of these new regulations to democratize in a way who can invest in early stage companies.
Yeah. So, I mean, we spun out of AngelList for that reason in 2016, because AngelList is solely for accredited investors. And we saw a bigger vision of democratizing access to this asset class that previously was just for accredited investors. And for those of you who might not be familiar with the term, because I wasn't, essentially an accredited investor for the longest time was someone with a net worth of over $1 million or income above 200K for the past 2 years, which not many people are at that level. Now some of that parameters have changed to be a little bit more flexible around who can be an accredited investor, but still not much. And so what we wanted was to create a platform where anyone can go on. If you go to republic.co right now, there are now hundreds of startups that you can potentially invest in with as little as $50. And I think that's something that's really key, because I firmly believe in power in numbers, right? I think sometimes, especially when you're overlooked by VCs, which, you know, many women minorities are, it can be hard to find the capital that you need. But if you have everyone around the world just taking a look at, you know, your company, there are others with their knowledge, industry expertise that can come in and say, actually, based off of my knowledge and what I've thought about this seems like a perfect way to tackle this problem, and can invest as much as they'd like. And so that to me is really key. We have about 1,000 people now on the platform. Sorry, not 1,000, 1 million people on the platform, which I think is really exciting. And we're about to turn 5 now too. So we're starting to see companies mature. We're starting to see, you know, Series A, B rounds being led by top VCs, and Andreessen just led 2 that just came out, which is really exciting. Really finding those top quality companies that also want to engage their user base, get new customers, and really get lifelong brand evangelists early on in their fundraising, so that they could be financially aligned, not just with, you know, their VCs, but also with like their customers, and make sure that, you know, everything's a little bit more equitable here, because, you know, VC is how you also create generational wealth. And so if people have more access to this asset class, you know, then that'd be great.
You just mentioned generational wealth, and the regulations that are in place right now for accredited investors created after the 1929 crash to protect grandma, grandpa for their pensions being wiped out. What is the profile of those individuals that can actually participate in Republic, and how you help them understand the nuances or investing in early stage startups?
Great question. It was still kind of sad, right, that before the Jobs Act, you can go and invest all your money in a casino, and no one was stopping you from doing that, but you could not invest in your friend's startup, right? So it's something where I think this is just starting to finally level the playing field a little bit. And then in terms of the investors that we have on the platform, to be honest, most of them are men, and most of them are already know what this asset class is. And so that's something that we're constantly trying to change, because if this is the way that you can create generational wealth, then we need to make sure that all communities understand what this is. And yet at the same time, there is, people are just starting to get into the public markets, right? With the boom of Robinhood and GameStop and all of these things, people are now starting to see how finance works. And so I think there's also a couple of trends helping Republic, right? Which is, one, folks don't want to be just consumers, they want to be owners, right? Two, they are founders are understanding the value of community and they want to make sure to bring their community in. Three is diversification. So not only do people want exposure to, Robinhood and the public markets, currently like a kangaroo market going up and down, but they want to diversify and put their money in other places. And the last thing I'd say, number 4, is alternative assets. So there's the rise of NFT, the rise of crypto. And so people are now not as hesitant to invest in art or music or things that weren't necessarily seen as investable asset classes. And so all of those things have helped gain awareness into the fact that you can actually invest in startups. But at the same time, this means that we really need to be extra cognizant of who is learning about this. How do we get them up to speed? We have an angel investing masterclass that we were able to do 5 weeks, and we had thousands of people tune in so that they could learn more. And so those are the types of things that I think we're very focused on, is education and access overall. So making sure that our platform as well is as intuitive as possible, and that anyone that has a question is able to get their question answered. So yeah.
Appreciate it. And this is perfect segue. We have in the audience the deans, executive vice presidents of faculty from 19 community college and universities in Oregon. If you were to have the magic ball and say, this is what higher ed can add to the curriculum and education and university students now in Oregon, what would you add to help those students understand how to finance their ventures, regardless if are life science, hardware-driven, or software-driven? What are the things you would add to the curriculum or co-curricular experiences for our university students in Oregon?
So that's for me? Yeah, okay. So in
Either
terms
you,
of
Cheryl, Ken, yeah.
I'll go first here. I'd to say it's really the understanding of the capital continuum, right? Understanding every single option that a business owner might have, right? And the crazy thing about it is that it's continuous, it's evolving. Like, I just learned today through a webinar another type of alternative funding model, and I had no idea about it before because it's recently created. And so that's what makes things fun and exciting, is that more and more, because of technology and just more entrepreneurship, which is the backbone of America, like, people are starting to come up with more creative ways to finance their projects and their dreams. And so that, to me, I think has to be a core part of the curriculum, is making sure that everyone understands their options so that they can make the best decision possible and for what's right for their startup at the right time. I would also just say that a venture gets all the praise, but and to be fair, like 43% of the Fortune 500 were venture-backed companies, right? In terms of, I believe, market cap. And so I'd say, venture does have a huge say in things, but at the same time, now with Republic and with other models, like, you can be a part of what will be the future. And so the question at the end of the day is, what do you want the future to look like, and how can you fund that or help fund that? And so the more people understand, what venture is, and, how they can keep an eye out for it and all these opportunities, the better.
Ken, what would you deal with the universities a lot, right? And you see how our engineers and scientists with great ideas, you have to work with them to get them up to speed in the commercialization and business side. What would you like us to add, if you could do it today, in our curriculum or co-curricular experience? That way, when they come to you, they're more ready and more prepared.
Yeah, and I know some universities are doing this at some level, but I think that's really one of the things that's critical to the success of a startup is that they have, 3 or 4 different skill sets on the team that are working together toward a shared mission, and that they're relentless, and that they will do anything they can think of to make this business succeed, because it's really, really hard. It's really, really hard to get a startup off the ground. And I think what happens sometimes, especially with scientists and engineers that are inventing things in the university, is they might have the mindset that, I'm a PhD in biochemistry or whatever. And so, how hard could this business stuff be compared to that? And so to some extent, that's true. But the reality is that, almost every study of successful startups has sort of demonstrated that a young scientist, a young engineer with a big idea, that the sooner they can bring in someone with business expertise and that knows some of these things that Cheryl was just talking about. I couldn't agree more that one of the big challenges is understanding the sources of capital and how they're similar and how they're different. People can spend a lot of time banging their head against the wrong door, trying to get money from people who are never going to give them money, and they don't understand why. They think maybe there's something wrong with the venture, or there's something wrong with them, or whatever. But it's just that they're talking to the wrong kind of money. Different kinds of money invested at different stages. And so if you don't know that, if you don't have that experience, if you don't have those networks, it's a lot harder to make your company succeed. And so I think I would encourage universities to be thinking sort of holistically about businesses, and teaming up engineers, scientists with students from the business school, from the law school, that can form those bonds, and that can have more well-rounded teams, because it's a lot easier for investors to invest in those kind of companies that are spinning out of universities than if it's just it's just the scientists that invented it and then want to do their first business. It's very difficult for those kind of businesses. It's very difficult to find and do matchmaking with someone with a business background. A lot of people try, angels try, we try, to try to find that person that we think, oh, this would be a great CEO to go with that great scientist. But unfortunately, arranged marriages usually don't work that well. It really needs to be more organic than that. So there needs to be an environment where those collaborations form, and where they include both the technical resources and the business resources on the team.
And that building those teams, early collaboration, make sure that team is organically grown, as you put it, is huge for the dynamics and livelihood of the company, right? Thinking along those lines, for either of you who wants to answer first, what are the biggest hurdles new hardware startups run into when looking for funding? What are the biggest challenges they have to overcome to get the first money in or additional funding to make it to market? Whoever wants to start first, that would be great.
Ken, all you?
Yeah. Okay. Well, so what's the first hurdle? The first hurdle, I think, would be having an innovation that really is the basis of starting a company. So, there's a difference between an innovation that would make a good product in some other company versus an innovation that you can actually build a company around. And so I think one of the first hurdles for entrepreneurs is really trying to understand that. And the way to understand that is with a lot of engagement with potential customers. And, almost anybody who works with entrepreneurs knows that one of the critical success factors is a lot of early and often engagement with potential customers during that early stage of development, even at the concept stage. That could be happening before you ever sit down at the bench and start inventing. You should be talking to customers. And if you haven't done that, or if you don't do that, that's probably the first barrier, because what that's going to do is it's going to lead you to having an innovation that might be interesting from a technical standpoint, but really doesn't have the ingredients that investors are looking for.
Cheryl, what are the challenges you see in hardware-driven startups to get funding? And I know Republic is like a new medium for those startups to actually get some first money or close the rounds. What are the challenges you see in your end?
So I'd say a couple of things. One is, especially since Republic has been moving a little bit more upstream because now of the $5 million cap instead of the $1 million cap, that means that we're actually, working with more seed, Series A, B companies, which means that, there's a little bit less room for pre-seed companies. However, we have had very successful hardware companies that had a lot of, LOIs already written and agreed upon, and traction shown in different ways, not just based off of revenue, that allowed for us to feel comfortable for them to be on the platform. One, like in particular, drones were something that was a really big thing. Same thing for the life sciences. Inamed was one of our first companies that actually raised a full $1 million back in the day. And so it's really about understanding what other types of traction do they have, if they have received grants in the past. So it wouldn't necessarily be like the first check-in, but it would definitely be a complementary source for them a little bit later in their growth. But at the same time, as a hardware startup, it is hard to find, the right funding. And so that's why we're integral when it comes to, more of the seed stage and more of the development to get to either commercialization or, more in the market.
I want to stay with you for a moment, Cheryl, because you just mentioned something important. Being able to give that vision to the investors and look beyond the early stage prototype, right? Because it's going to be rough around the edges, maybe not 100% complete, but it's a there. How can a startup founder prepare to get in front of the investors and make the pitch that, yes, it's a big battery, bulky, but this is what it could be? Any advice you have for these founders to be able to make the pitch and paint the picture of what could be, not versus what it is right now?
So that is something that we work with companies that have already passed our due diligence. So once we see that there is a there, then it's more around the marketing aspect of this, right? At the end of the day, since anyone can come on the platform, anyone around the world, it really just becomes more of a, like, how do we paint the picture in the most effective way? What at the end of the day is this tackling, right? A lot of the drone companies that we work with, they're tackling safety, right? So how is this making the world safer? Right. Or Delhi, that also raised a full $1 million. That's came out of Y Combinator. And so they had a traction point there of going through a really great accelerator. But they were a Mexican company, right? And they were one that, generally wouldn't have. And it was led by a female founder, by the way, too. And so they, were generally more overlooked. So this was a great way for them to raise a full $1 million. At the same time, show that they're also battling cancer in a different way, and through a proprietary, innovative way. So it's really around thinking about the big vision, because our investors like to, invest in something that's doing good for the future. And so, they're always, social proof is always important, like in terms of like, if you do have a Y Combinator, if you did come out of this really great lab, or, if you have a really talented team, right? Sometimes startups come down to what unique insight do these founders have that no one else has that will allow them to execute on this vision. And so, as investors, at the end of the day, you can have the greatest idea as possible, but if you're not going to execute, then that's, your SOL, which is why we're so focused on, whether or not this is the great founding team. Do they have some notable traction points? And at the end of the day, like, how can we market it best to our investors? And we have a campaign marketing team that helps with that.
Thank you, Ken. Everything you see is hardware driven. I've seen those prototypes out there. ESS is a big example. I know they have their big battery park and the cul-de-sac at the PSU Business Accelerator. What advice you will give to those hardware driven startups to get ready to pitch you or other investors?
Yeah, I would say any company that is going to be pitching to investors for the first time really should go through some kind of an accelerator program. The world of investing has a certain language to it. It has a certain cadence to it. And if you haven't done that before and don't know all that, then an accelerator program is a great way to do that. And there are also resources online that are, the equivalent of a program. And you really have to go through that so that when you engage with that investor for the first time, that you're speaking that person's language, that you use terminology, that you focus on the things that an investor is interested in. Sometimes companies tend to focus, they tend to pitch their product the same way that they would pitch it to a customer. The pitch to a customer is, why should you buy my product? That's not the pitch to an investor. The pitch to an investor is, why should you invest in my business? They're looking at the business as a whole. They're not looking to buy your product. And so you really have to kind of understand the frame of reference that they're coming from and how to talk about that. And going through some kind of an accelerator program before you start making that pitch is definitely the way to do it.
Thank you. Both of you touch on diversity and impact. Last year, 2020, that was a rough year for everybody. But even with that, 2.6% of the funded companies through VC or angel investing, it went only to women, Black, and Latinx entrepreneurs. How can we change that? Any suggestions to be able to find those founders? And what are you doing different to be able to look for the Black and Latinx entrepreneur, the women entrepreneur that normally will not get access to be in front of a VC and pitch and get access to funding? Let's start with you, Cheryl, and then we jump to Ken.
Sure. So this was something that attracted me to Republic in the first place, right? I took a pay cut to join this, mission-oriented startup because at the time, 40% of our founders were women and 20% were Black and Latinx. Those are actually our same stats now, but they actually dipped for a while because as we continue to grow and scale, even though we were democratizing access and a lot of underrepresented founders were coming to us, we're now starting to host 100 companies on the platform at any given time. And so now there's also a lot of later stage companies that are coming to us to raise too. So as I mentioned, we're moving upstream, and yet at the pre-seed level is where we see a lot of underrepresented founders because they're trying to get off the ground. And so what we did, especially during the pandemic, right, where we saw that, VC funding was going towards, less risky people, which meant like just people in their networks, and they happened to be mostly, the traditional VC founder. And so we were like, we have to find a solution. And so the way that we did it was through our venture partner program, which I created back at the beginning of COVID, which is essentially coming together and bringing like cohorts of VCs, accelerators, and ecosystem players that were committed to diversity and our mission and wanted to make sure that underrepresented founders had access to capital. So whether it's through them as a VC or an accelerator, and then if it wasn't a fit, or maybe it was and they became a portco, they could also still raise from Republic. And so 65% of our deals are underrepresented founders, which I think is incredible now as a whole, right? That's our pipeline. And so we're able to have full visibility because all of our venture partners are everywhere. It's international as well, which I think is really impressive. And so that's something that I think we were intentional about because diversity and inclusion is intentional. It's something where you can't just, throw some money at it and call it a day, right? It's something where you have to build these programs, you have to talk and walk the walk. And you have to make sure that even if you are moving upstream, that you still have responsibility to bring in a diverse set of, different types of risk profiles for startups on the platform. And that's actually good for the investors because sometimes people want to just invest in pre-seed companies or people want to invest more in later stage. So it's about giving that variety. And at the same time, another way that we can help underestimated founders is also by getting more underrepresented investors, right? And so because there's a key, it's fact that if you have more underrepresented investors, you are able to support more underrepresented founders because you're able to see things that the traditional status quo won't. And so that is something that we're constantly working towards. We actually have a venture fellow and associate program to educate folks that are looking to break into VC with not just education, but we actually give them money to then invest on the platform, right? So it's a way to build their track record, and it's a way to get them going around their investment thesis and what they believe in. And so we've already gotten we did a pilot program in Q4 of like 20 something venture fellows, and 3 of them have already gotten into VC, and they're all diverse. And so it's just a matter of like, these things that were drops fill the bucket. And, once again, there's power in numbers. And so we're really trying to create a full stack investor ecosystem with our venture fellows as college graduates, venture associates, MBAs, mid-career professionals, and then venture partners who are seasoned folks in the industry that have the deal flow and can all like mentor each other and grow together. And so that's kind of how we've thought about it. And that in itself helps also underrepresented entrepreneurs.
Great, thank you. Ken, Vertuelab and the fund, you have a tough job. And top of that, having to find those women, Black and Latinx scientists and engineers. Systemically, academia is producing non-diverse teams. So how you find those folks and how you make it part of your mission and impact?
Yeah, Juan, you're right. It is hard, and it's systemic, and it's been, centuries in the making. And it's going to take a lot of big ideas and just a lot of basic blocking and tackling, and essentially people having the will to want to do it. And so I would say what you said is true, that it may be harder to find a BIPOC scientist or engineer in that to staff up that startup, but in some of the other disciplines that might not be the case. And so again, in sort of forming that initial founding team, there are things that startups can do, and there are things that investors can do to encourage them. So, at Vertuelab, we have embraced this as a core value, but we have a long way to go, honestly, on our journey, and we're working hard at it. We have done some things that we are really proud of, and we've done some things like worked with some other organizations on an event that we call the Badass Women's Entrepreneur program. That's focused on women entrepreneurs. We have been fortunate to receive a grant from Meyer Memorial Trust to add a fellow to our fund management team, and that will be a woman of color who will be joining us in July. And so we set out very specifically with an idea to diversify our team and to bring in another set of eyes, someone who, when looking at that pipeline of companies, will be tapping into different networks, and we'll have different perspectives to be sure that we're more attuned to overlooked entrepreneurs. And then the other thing we have the ability to do, and we've done and we'll be doing more of, is at the point in time when we're investing in companies, we can make sure that they share that idea, that they want to embrace DEI as they build out the business. And so we look for commitments from the CEOs, in terms of how they're going to build their board, how they're going to do their next hires, how they're going to build their team. And that's part of our evaluation and part of sort of the contingency, if you will, on our money. And so that's how we can exert our influence at the point in time when we invest, to be sure that the companies share that value and that they will embrace that as they grow. And then we, as I said, we have to continue to learn and grow ourselves as an organization to find other avenues. We look to partner with other organizations that are much better connected to communities that we're not connected with. We look to partner with them and team up with them and learn from them. So that's, those are some of the things that we have underway at Vertuelab.
Thank you. Before we wrap up, we have in the audience the student teams from 19 community college universities that in a couple of days they're going to be presenting and pitching their ideas and in a way pitching for the first round of funding, right? They're competing for $30,000 in prizes. What would be your advice to them as they move beyond the competition and they might look into fund their companies? You can, and we'll close with you, Cheryl. What is your advice to our up-and-coming science innovators and entrepreneurs in Oregon? They are in college right now.
Yeah, I guess I would say a couple of things. One is just embrace and enjoy the process. It is a process. It's a learning process. It's an iterative process, and nobody expects that you have all the answers, the first time out of the gate. And then the other advice I would give is to smile when you're presenting. People like to engage. Early stage investors are not just typically writing a check and then never talking to the entrepreneur. It's a partnership. They want to be involved in the business. They want to be a mentor. And so, part of it is to understand that you're trying to engage with investors versus just try to get money out of their pocket.
Thank you. Cheryl.
Yeah, so one, being an entrepreneur and taking your work and presenting it to everyone is it's an incredible feat, right? Being an entrepreneur is masochistic. It's putting your blood, sweat, tears, everything you have into what becomes your baby. And so to me, it really, one, it's honorable and something that I feel like everyone should at least have a go at and something that they believe in. But two, it really is the backbone of our economy and our future. So these are things that do need funding, but at the same time, venture is a way, and similar to Ken's note, is that you have to know how to speak the jargon and you have to be able to pitch effectively. And so I would actually, maybe going back to even just your question, Juan, around like what should you show in a curriculum, I would also say pitching is a art form. It's something where you can still learn how to do online, and you'd be able to present the story in the best way possible, because storytelling in itself is something that CEOs need to do. It's something that everyone needs to do, but especially if you are fundraising. So I would go ahead and say you might have the best technology, you might have the best, way to deliver it, and it might really change the future. But if you don't have a good way of presenting the story and the narrative, then it becomes more of an uphill battle. And so definitely look at the pitch, make sure that you are communicating this as best as possible, and then going from there. But regardless, you are all doing something that's incredibly hard. And so I want to make sure that we're always here as a resource for you.
Thank you. Thank you, Cheryl. Ken, thank you so much for being here with us. During the last 5 years of Inventor, working with students across the state, we come to a realization that the spirit of innovation and entrepreneurship is equally distributed across our zip codes. The opportunity is not. And the fact that you have made time today to talk to us, share time with our students, that means a lot to us. Thank you. We're looking forward to see you in Portland, Cheryl. Ken and I will take you out, show you around. Have a great afternoon, and see you soon. Thank you.
There are many paths for innovators to pursue funding, but it can all feel a bit overwhelming. Tapping into mentor networks for guidance and access to unique resources can be the key to finding the right source for that crucial capital. With this support, entrepreneurs from diverse groups are finding more opportunities that focus on bringing their products to market. Universities can play a crucial role in nurturing representative mentorship, giving new innovators a place to seek out what they need beyond the classroom. This week, we are covering a repeating theme: how crucial it is for founders to both invest time into market research and to continually speak with consumers. Insights from these activities shape not only how a product is developed, but how it can be sold. Speaking to investors can be a very intimidating and stressful prospect. We hope that everyone viewing today is inspired by these folks who are seeking to make funding more accessible. Believing in yourself and your innovation is crucial to success. Sharing your passion with consumers may come easy, but pitching to potential investors requires a deeper look into your business as a whole. Don't forget to register for the pitch presentation by our student competitors live on June 25th, starting at 9 a.m. Join us later today for distributed manufacturing for the post-COVID world at 3 p.m. The programming today would not be possible without the generous support of our sponsors. the Lemelson Foundation, Business Oregon, Stoll Reeves, Oregon Community Foundation, the Ford Family Foundation, Horan Media Tech Advisors, Portland State University, Wells Fargo,